So welcome back to the Business Warroom podcast. I'm your host, Vinny G. So you think you're winning. You think because the bank doesn't own your front door, you're the king of New York? Well, you need to wake up. On today's episode, I'm taking you back to 2008. I remember I sat in a diner on Cropsey Avenue in Brooklyn, and I watched a guy, let's call him Safe Sal, crying into his coffee. See, Sal was a responsible guy. He took every dime of profit from his plumbing supply business and paid off his warehouse. He had zero debt. He was proud. But if some of you could recall 2008, you know then the market tanked. Construction stopped. His cash flow, it dried up. He needed 50 grand to make payroll, or he was going to lose his best guys. So he goes to the bank. He says, look at my paid off warehouse. Give me a line of credit. You know what happened? The bank laughed at him. Sal, your liquidity is zero. We aren't lending. So Safe Sal, he went under. I bought his inventory for 10 cents on the dollar. Why? Because I have capital liquidity and he had debt equity. He played it safe and he got slaughtered. So today I'm stopping you from committing financial suicide. So let's get to work. I see you scrolling. I see you listening to these poverty gurus on TikTok. The guys telling you, all debt is bad. Cut your credit cards. Live in a hut until you're 60. That is a scarcity mindset propaganda. They're selling you fear because fear has a low barrier to entry. It's easy to sell safety to a coward. They tell you a paid-off home is an asset. In the Business Warroom, we look at the balance sheet and the math don't lie. A paid-off home is illiquid capital with a 0% rate of return. It sits there. It doesn't cash flow. It doesn't scale. It just decays. See, you are confusing peace of mind with opportunity cost. And that confusion is costing you millions. So I got this email. This kid is 29, a young lion. And he writes to me, he says, Vinny, I owe $50K on my mortgage, no other debt. I got the cash to pay it off. Should I write the check? Are you out of your mind? You are 29. You are in the accumulation phase, not the preservation phase. Before I begin, I have a quick disclaimer. I ain't your financial advisor. I ain't your daddy. And I ain't the SEC. This is Vinny G's opinion on market mechanics. You lose money, don't come crying to me. Do your own due diligence. Now, let's break it down using arbitrage and leverage. Let's start off with what I call the inflation play, the Fugazi factor. That 50K debt, if you got a mortgage in the last few years, you're paying what? 3%? 4%? Inflation is hovering around that or higher. That means the bank is practically paying you to hold that money. You are paying them back with devalued dollars. That is a macroeconomic hedge. Keep the debt. Now, let me break down the opportunity cost. You write that check for 50K, it's gone. It's trapped in the drywall. But if you keep that 50K liquid, that is dry powder. You take that 50K, you leverage it as a down payment on a multi-family unit, or you buy a laundromat or a vending route. You look for an asset with a 15 to 20% EBITDA margin. Now, let me hit you with the math. Option A, you save 4% interest on 50K. Whoop-de-doo, you save pennies. Or option B, You earn 15% on that 50K in a business. You make the spread. That is arbitrage. That is how the banks make money, and that is how you should make money. I said this millions of times. You don't get rich by eliminating liabilities. You get rich by acquiring cash flowing assets. Now, let me ask you this question. Why do you want to pay it off? And be honest. It's because you want comfort. You want to feel safe. Seneca said, "He who fears death will never do anything worthy of a man who is alive." Now I say, he who fears leverage will never build an empire worthy of a legacy. A paid-off house at 29 is a pacifier. It makes you soft. It removes the hunger. You need that pressure. You need to know that you have to perform. The Machiavellian operator knows that fortune is a woman. And if you want to win her, you must be bold. You don't court fortune by hiding it in a paid-off bunker. You count her by putting your capital on the line and demanding a return. So here's the play, kid. Put the checkbook away. Keep the mortgage. Keep the cash. Go find a distressed asset. Go find a business where the owner is tired and wants out. Use that 50K to control 500K worth of real estate or business value. Don't strive for zero debt. Strive for infinite returns. Now, I'm going to leave you with this. Write it down. Tattoo it on your arm. I don't care. Security is for the prey. Leverage is for the predator. Decide which one you are before you write that check. Now, if you're tired of playing checkers while the elite play chess, get in the Business Warroom Council. We don't talk about coupons. We talk about conquest. The link is in the bio. Reach out. And don't forget to check us out on social media. Subscribe to our podcast and our platforms. And I'll see you all on the next episode. Peace.